ask yourself, if demand were to go up 5% or 10 or 15%, how easily could I scale my labor force? Do I have the relationships in place? Have I built that muscle to be able to flexibly scale up? And then conversely, if demand were to go down by 5 or 10 or 15%, how rapidly could I adjust, and what would be the cost associated with that? And that'll typically very quickly make you realize that your labor mix might not be as optimized as you think.
Hey everyone, I'm Debbie Madden, the host of the Scaling Tech podcast. Thanks so much for listening and watching today. Really excited about the conversation we're about to have. I'm talking with Hugo Malan about how business leaders should think about the labor mix today. I know a lot of us watching are tech executives, and this is something that we think about always, all the time. So this is one of those evergreen topics. Before we jump in, a little bit about Hugo. He is the president of an organization called Kelly Science, Engineering, Technology, and Telecom, which is a segment of the staffing giant Kelly Services. And they power tomorrow's innovations with today's brightest talent. So Hugo is very versed in this topic we're about to discuss. He leads a team of workforce solutions specialists who partner with leading organizations to position them ahead of industry trends that are shaping their talent needs. Hugo is also an advisor to several tech startups and recognized in the staffing industry for leadership and passion for disruptive innovation. So really excited, Hugo, to have you with us today. And I always like to make sure everyone's on the same page with my first question. So let's align on the definition. When we say labor mix, I believe the primary options are permanent, temporary, and consulting, but tell me if that's correct, and tell me if you want to enhance my understanding of what we mean by when we say labor mix.
Hi, Debbie. Great to be
Thanks
here.
for being with us.
I think those are three good broad categories. I think the first two are generally what's considered your labor mix, and then consulting is typically a group that you bring in for a temporary project with a specific deliverable, and often a capital project. But your permanent employees, we know what those are, people you hire into the company. And then temporary employees are often people that you bring in through a staffing agency, for example, to work alongside your permanent employees in similar roles, to add capacity or to add specific skills. There is a blurring between the second and the third categories these days. Right. Increasingly, staffing agencies are prepared to take on projects, and Kelly is no exception. A decent amount of our business these days are projects of various kinds or even full-blown outsourcing. But I still think those three categories are good to work with. And temporary and permanent are the two that you really think about as your core labor force.
Got it. Okay. And I think that aligns pretty well with not only my definition, but I know many of our listeners as well. So that's great. And so in your opinion, why is it important that companies find the right mix? And how do you define that? I know that's a broader question, but why is it important, and how do you define that right labor mix?
Ultimately, it's a trade-off between flexibility and then between continuity of skills and labor inside your company. And it's important to find that right balance between the two, because if you don't have the right level of flexibility, if you find demand suddenly spiking up or spiking down, and you need to adjust your cost structure, if you don't have a flexible component in your labor, then it becomes more difficult, and you can ultimately see significant negative impacts to the bottom line if you're facing a downturn in demand, or you're unable to respond fast enough to an upturn in demand. So building that muscle that gives you a flexible component to your labor force is important for those reasons.
Yep, I couldn't agree more. So I appreciate you sharing your thoughts on that. And so I want to get into the thing that sparked this conversation when you and I were talking, offline ahead of time, and you had shared something with me that I want to get into now. So you had shared that the labor mix in the U.S. has shifted dramatically away from temporary labor in a surprising way. And so tell us about this and tell us why it was surprising.
It really has been unusual over the last 18 to 24 months to see the temp labor penetration rate decline significantly. So let me explain what that is. The Bureau of Labor Statistics track temp labor, and then they track the total workforce. And if you divide temp labor into the total workforce, you typically get around 2% or so temp labor penetration during good economic times. And good economic times we can broadly define as 3% or so GDP growth and a relatively tight labor market, unemployment maybe around 4% or so. That's pretty much what we've had over the last, call it 18 to 24 months. But despite that, the temp labor penetration rate has dropped from 2% to about 1.7% today.
And that
That's really been
0.3 is a
unusual.
big difference. That's a big difference.
It really is. Yeah. At first blush, you might look at it and say 2% to
Right.
1.7%. It's
Uh,
tiny. But if you do the percentage on a percentage, it's about 15% of the industry is just evaporated. And the staffing industry is sizable, call it 60 billion upwards in the US. So for 15% of that to just disappear in the space of 18 months is very unusual in good economic times. During recessions, it can go even lower than that. And we saw it drop even further than that during the midst of COVID. But in times like these, where you're seeing GDP growth, normally you expect that to be significantly higher than it is today.
Interesting. Okay, so now I want to know why we think it's going on, and so you could explain it with various pieces of data, but why do you think that some of the more obvious explanations, like overhiring, which maybe people had done prior to this 18-24 months, or even increased productivity due to things like AI, why do you think that those explanations maybe don't really tell the whole story? And do you think those are part of the story, or do you think those are wrong? So I guess two-part question.
They may have played a part in the story, but as you can imagine, particularly people in the staffing industry has really been puzzling over this. And those are our initial thoughts that were offered, that there had been overhiring and now there's kind of a slowdown or a pullback. Or like you said, there's been an increase in productivity, perhaps driven by AI, and therefore we need fewer workers. But the reason those aren't or can't be the full explanation is companies were still hiring quite robustly on the permanent side. So over the last 18 to 24 months, if you've been following the job report, every time it comes out, there's been a few 100,000 jobs created. And it was more some months and less some other months. But there was fairly robust job creation and filling over the last 24 months. There was just significantly less use of temp labor. And that was the surprising thing.
Interesting. And so do you have a sense of the root cause or causes? Or is that a mystery?
It is a bit of a mystery, but we've done some research to really try and understand this. And we believe there is actually a factor that's been overlooked in the past that's a strong driver of temp labor penetration rate. Specifically, if you think of the psychology of hiring managers or company executives, if they're fearful of the near-term outlook, they're very unlikely to start short-term projects or bring on short-term capacity. So that anxiety about the near term can really depress temp staffing penetration and temp penetration rates. But if they're still feeling good about the medium and long-term outlook, they might be hiring capacity to support a good medium-term growth outlook. Now, that's an unusual situation, but we think that's exactly what we had last year specifically, and even into this year. If you think back, we were all continuously told the recession is going to hit next week or next month.
Right.
And we were all sitting here on tenterhooks waiting for that recession to hit.
Right.
And it never did.
Right.
But that near-term anxiety, we think, is what depressed the use of temp labor. But the medium-term outlook actually looked pretty good. We all expected in the medium-term interest rates would come down eventually. There'd be some more political and maybe even geopolitical certainty emerging. And so the medium-term outlook supported the hiring of permanent workers internally.
Yeah.
But the short-term outlook mitigated against the hire of temp labor.
That's interesting. And I've seen a lot of that. As you know, my company Stride is, in the same kind of broad industry as you guys are, and we are not staffing. We're more in that outsourcing contract category, but we definitely see those very similar behaviors over that same time period, from a slightly different view, but very, very much overlapping. Now, do you have I don't know if you have data to support this, but have you seen any recent historical shifts in this? Or because your time period is 18 to 24 months, but if I said, what about the past month? What about the past 3 months? Do you, and again, the data might not be all, ready yet, fully baked yet, but are you seeing this trend continue, or are you seeing any shifts?
So the best proxy for anxiety that we found is literally this thing called the anxiety index. And it's published based on a survey of several hundred economists. And the question that really drives it is, what is your expectation of the likelihood of a recession next quarter?
Okay.
So it really is measuring
Yeah.
in the near term. And that anxiety index spiked to very high levels through the second half of last year, precisely of what
Yeah.
we talked about. Everybody was expecting a recession to hit tomorrow. It's come down significantly. In fact, it dropped to kind of more of a normalized level, I would say, in Q2. So we expected that to also then drive more of a normalized demand for temp staffing. Unfortunately, it just came out for Q3 and it spiked back up. Now, not very high, it just ticked
Okay.
up.
Okay.
So I think people are still finding their way in this environment. I think the recent pronouncements of upcoming interest rate reductions will do a lot to start bringing down near-term anxiety. And as we all know, we'll get more political certainty to the end of this year, one way
Yep.
or the other,
Yep. Yeah.
and that'll also start, I think, driving a more favorable outlook for the
Yeah.
near term. So I do expect things to normalize through the course of 2025.
Yes, I do as well. And so I'm glad to hear your take on it, because that kind of aligns with my beliefs, but yours is backed by more data. So I appreciate you sharing that with all of us. And I'm sure everyone listening feels the same way. And so, we talked about the almost like the decoupling of staffing trends from broader economic indicators. And we know that somewhat surprising, but also we can kind of make a little bit of sense of it by looking at the economic anxiety based on, do we think there's going to be a recession? But how do you think these kind of like decoupling of staffing trends is already impacting and is going to impact the industry, both, from the folks like, your organization, my organization, providing these temporary and contract laborers, but also for the executives hiring these temporary and contract labor and into their labor mix. So, yeah, what do you think the future impact of all this is?
Well, I think for folks in our sorts of industries providing these services, clearly it depresses demand. It has done so, and it will continue to do so until things normalize. I think the effect on the broader industry that use our services is that they have, perhaps not deliberately, but nonetheless, the facts are what they are, created a less flexible labor mix in many instances. And we understand what might have been the drivers for that, but the outcome of that is that if there is an uptick in demand or a downtick in demand, and the second probably being the riskier of the two in terms of the bottom line impact, companies will find it harder to adjust than they may have done in the past, where they had a mix that was somewhat more leaning towards the temporary side, whereas today I'd say it's artificially low.
I do think that's going to impact their ability to innovate, right? Because if they don't have the talent and the team to implement the strategic plan, then if they've swung too much into the permanent mix, due to anxiety about the future, it might take them longer to then, once they get started, it might be harder to kind of start that engine back up, right?
That's very true. If you batten down the hatches and you take your organization down to a core crew of folks who can maintain the business, but you're not investing in people bringing skills that you may not have in-house, or people bringing just the additional capacity in anticipation of some increases in demand, it's going to be harder to respond and, like you said, to innovate.
Yeah, yeah. It's going to be interesting to see how that plays out for sure. I've been talking to, tech executives my whole career, and I think the last 18 to 24 months, and I've said this to many people, as a collective, it is the most paralyzed I've ever seen in terms of innovation, right? And I think that it's starting to open up, but I'm still seeing this anxiety, this future fear, this uncertainty, um, in a way that I haven't seen in 20 years. So it's really interesting. It's really interesting to think about what's to come. And so, like, I kind of want to shift to the kind of the future thinking, what's possible, as we kind of round out the conversation. So, no one has a crystal ball. We all know that, but what's your kind of best guess at how future macroeconomic trends might affect the staffing industries? You said there was, like, demand has been depressed, and that's for sure, globally. Um, for the staffing industry, how do you think future macroeconomic trends might impact the recovery or future decline? Like, what do you think the future holds?
Ultimately, I think the future is very exciting, because when the economy goes through these periods, like you describe, where there's um, almost a frozen wait for the future approach, there's an amount of debt that builds up on the technology side. There are systems that you should be upgrading that you wait another year on. There are innovations that you should be pursuing that you also wait on. And then suddenly you find that the dam bursts and the economic indicators somehow reach a level where people now feel they need to invest. But then everybody's trying to invest at the same time. And if you're providing services to companies, that can be a very exciting time because you can see explosive growth, double digits, 10, 20% even, coming out of these sorts of periods of waiting. But it can be a bit challenging on the company side or the client side because everybody is looking for talent at the same time. And that makes it a little bit harder. It's also paradoxical that we have found ourselves in this period of not investing as much because there's been so many interesting things to invest in. The potential for AI to transform the way we work, or even just more mundane robotic process automation to transform how we work inside our companies has never been greater. But there's been definitely a hesitance and a reluctance to invest in those sorts of capabilities that will ultimately drive productivity and spectacular bottom line outcomes.
Yeah, it's a delicate dance for sure, especially in this year. So let's wrap with a little bit of advice for folks that might be saying, okay, so now what? How do I move forward? So for leaders that are wondering, what the right talent mix is for them, what's your kind of best advice for how they might go about identifying the right labor mix for their business needs? And obviously, it's going to change over time, and factors are going to change. But how do you advise business leaders to kind of approach thinking about what works for them?
What I'd advise is start with your strategic planning and your business planning, looking at different scenarios. In an uncertain climate like this, it's best to contemplate several different scenarios because, like you said earlier, none of us really have a crystal ball.
Yeah.
But ask yourself, if demand were to go up 5% or 10 or 15%, how easily could I scale my labor force? Do I have the relationships in place? Have I built that muscle to be able to flexibly scale up? And then conversely, if demand were to go down by 5 or 10 or 15%, how rapidly could I adjust and what would be the cost associated with that? And that'll typically very quickly make you realize that your labor mix might not be as optimized as you think. And then reach out to your friendly neighborhood staffing company, and I'm sure they'd be happy to help.
I think the keeping up relationships to have that flexible capacity, I think is a very key component. And I couldn't agree more. I think a lot of folks that are on the buying side of this equation, right, and you and I are on the selling side, are sometimes hesitant to take time out of their day to build those relationships. But every time they do, they're thankful for it because it is a lever you can pull to have that flexibility when you need it, but you don't have to build it. But if you don't have that relationship, then you first have to go and find that relationship, and that can take months. Right. And so I do really think that I want to kind of double down on that point because I think that's key. And the technology leaders that I know that take that time are the ones that can benefit from it most when they need to kind of make that phone call. So I appreciate you for mentioning that. And sadly, we are out of time. Thank you for being on. This has been a great conversation, a very important one. Thank you to everyone for listening and watching, and we'll see you next time. Take care, everyone.
Thank you.
Thanks, Hugo.